I think the Bitcoin ETF is a Trojan horse. Yeah, it's basically turning Bitcoin into a TradFi asset, something that basically plays by the rules of the system. But by doing so, it's being used to onboard the system. It's the perfect Trojan horse, and it's going to end up in the 401ks of millions of people that otherwise would not have this exposure. And just having that Bitcoin there is going to make them think about it, and they're going to eventually, many of them are going to align the fact that they hold Bitcoin with the fact that they're deeply unhappy about how shit is going down. They're going to connect that Bitcoin is actually an alternative. It's an alternative to the system.
All right, guys, bang, bang. I've got Alex here. I thought a great place to start this conversation is a recent tweet that you put out, and I thought it just was a perfect epitome of the current situation. You said, "Let me tell you why I remain very bullish on risk assets. Inflation is coming down, interest rates as well. The U.S. economy remains strong. Soft landing is becoming a reality. Trump will win. Peace talks are in the air. China just turned dovish after 2+ years. Quantitative tightening will end in 2024. Global liquidity is increasing, and AI-driven growth is in the process of accelerating to a point that human mind can't even comprehend." Is everything just go up from now? Like, is that where we're headed? Just risk assets are all going to go up?
I do think so. I do think at the same time that on the short term, the market is a little bit too hot. Kind of like the example, the analogy would be, this looks like June last year. We're about to, I think, pump up a little bit more and then correct. But like it's, I think it's important as an investor and a trader trying to differentiate between short-term trends and the bigger picture. And the bigger picture and the larger trend, it is based on what you just paraphrased. It's up and strongly up. Short term, definitely right now, the market is a little bit hot. The way to think about this is mainly driven on the risk asset side by the Fed pivot from December. So we are literally 7 weeks into that expansion, and it's been pretty significant. So it's mostly in the price, the pivot and the soft landing narrative is becoming consensus. Is not yet consensus. There is a lot of people, and they make me bullish every time I read them, that firmly believe that the economy must undergo a severe recession based on basically a very limited sample size from past crises. And one more thing to add there, or at least one more thing, is when we're looking at trying to anticipate what the future is going to be based on what the past has done, and the sample size is so small and stretches through such a long period of time, like the sample starts with 1929, right? It is not correct to put the same weighting. This is very subjective, but I firmly believe it's not correct to put the same weight to events that happened in 29 than in 59, than 81, than 87, 2000, 2020, and right now, because it's a different world, it's a different market. The Fed is an entirely different animal with so many tools at their disposal. Before, they just basically manage the Fed fund rates or the discount rate. That now they have the ability to do so much more. Something else on that, a couple more things. Trump. I think Trump will win. I'm not Republican. I'm not a Democrat. I'm not even American. If I would vote, in the past I would have voted Democrat. Since in the last few years I have gone to the right. I would vote Trump nowadays, even though I'm not a fan of him. But leaving aside preferences and views, I strongly believe that Trump will win. It's going to be a home run for him. His campaign is extremely well organized this time, unlike prior times. And he has a very weakened adversary on Biden. And even though the US economy is actually strong and much stronger than many people think, there is something else, which is perception is not in line with reality because of how strong inflation has been and was between 2020 and 2023, not any longer. Most people are unhappy there, and also there is something else. The inflation has also driven a big wedge into society and society, U.S. American society, and actually worldwide society is becoming more and more polarized between the haves and the have-nots. What that means is not that the have-nots vote for Trump. What that means is they vote against the status quo because they are unhappy. So I think Trump will win, and historically, actually, Democrats are slightly better for stock markets than Republicans. But there is something else there, which is Trump is obsessed with winning and obsessed with the stock market. So based on that, I think Trump is good for the market, and something else. Sorry, I keep on saying something else. Something else that Trump will likely bring up is a threatened Federal Reserve. He's going to bring back, let's remember these ghosts that we experienced on his presidency. I think it is likely that he will go after the Fed again and threaten their independence. What that translates into, I believe, I may be wrong, but I believe that basically pushes interest rates, short-term rates down and long-term rates up. Basically, a more dovish Fed, when they shouldn't be as dovish as Trump will want them to be, is going to basically literally bring short-term rates down, and inflation fears in a backdrop of basically exorbitant debt issuance in the U.S. should, I'm not certain actually if long rates are going to go down, but not as much as short-term rates, or actually up. I lean towards the former, but it could very well be that they end up going up. The point is for yield curve steepening, and that is I dare say is largely good for risk assets in aggregate, not great, but is very negative for the long end of the curve, and also for mortgages. And so I'm not painting a disaster scenario. It's just a driver that makes things not as rosy as they would otherwise would be. Just one last comment on that. The U.S. debt right now is growing about 6% per annum. It's absolutely unsustainable. Everybody knows.
Well, so we just saw the Federal Reserve Chairman Jerome Powell say that on 60 Minutes, right? Where normally I said, they don't. Somebody in his position wouldn't kind of fire at others in leadership positions. He's kind of an independent. He normally would just say, hey, I don't have that much to say about this. But to say it is unsustainable over the long run seems like it was almost he was issuing a warning. He was telling the American people, hey, you should be paying attention to this. And when you see the national debt now over 34 trillion, the interest payment alone is now cost over $1 trillion a year. How do we reverse this, or how do we get out of this situation, in your opinion?
I think it comes. It's about economy. It requires very long-term change in the economy, in economic behavior by market participants. It's going to take a very long time, but there is a way out. I think there's only one way out, which is basically growing and growing a lot. So in a way, we could think and try to make an analogy with what happened in the late 90s with the Bill Clinton administration. The U.S. actually ran for a brief period of time fiscal superávit. It is feasible, but we've gone, the U.S. economy and the world economy has gone so far out that it's going to take a long time, and it's basically about growth. And I think that's a reality. I think it's going to happen because it's tying it back to AI. The market commentators tend to think, and especially traders, that it's overrated, that AI is not going to solve all our problems. And yeah, they're right. But AI it's in my view, and I'd be surprised if I'm proven wrong in 10 years, is the most significant change in history. And it's going to happen at the fastest pace of any change in history. The change is going to be so dramatic that we cannot even understand how things are going to change, because it's not going to be us anymore thinking about this. It's AI, right? So that's another thing that ties into this thinking of we should not be extrapolating the past. as we have. We need to be open to this time things may be different. And in fact, this time things have already been different when it comes to the yield curve inversion that basically got absolutely everybody bonkers, almost everybody bonkers, and calling for a very hard recession since literally started in 22 and went all through 23. And it didn't happen. This time is different.
One of the places where there is radical change underway, or an attempt at radical change, is Argentina. This is a country that you understand well. You spent a lot of time thinking about, I believe. And Milei has come in there, and he was elected with a very clear, I'm going to go implement radical change. For what I can tell as an outsider, it appears that he has already taken some steps, some measures that he's trying to implement and kind of fulfill the campaign promises. So it appears to be just talk, but he's actually trying to act on it. What is your analysis of him, his, kind of campaign promises, and whether it can be successful? Like, can he turn that country around?
Well, I'm born in Argentina. I grew up there. I'm Argentine. I'm what you would define, what people may define as Argentine diaspora. Argentina has had a long history of crisis after crisis. I'm from the generation that left in the early 2000s when basically the socialism took over the country again after the Argentine peso imploded. And we abolished the convertibility law that had peso pegged to the dollar 1-to-1. I was, in fact, actually working at the Ministry of Economics at the time. So that said, I see Milei. It's crazy. It's the first politician in my entire life that I feel connected to. He speaks to me. I do believe that governments are a bloated parasite just sucking our blood, and that's exactly what he's trying to achieve. It's like going after the bloat, going after all the parasites and get rid of them. And how successful can he be? It's difficult because he has very little support in Congress. He has under 10% of congressmen are his. With his alliance, the congressmen he has are in the low teens. It's nothing. So the way I see it is he has to survive. He needs to survive the first 2 years and go into the midterms. They're going to happen in 2 years. And then basically change the shape of Congress to actually be able to deliver what he wants to do. Initially, I was placing odds of him to succeed at around 40%. I think it's higher now, higher than that. That being said, it went from 0% to 40, 60%. Argentina was, let's put it this way, if the Argentine GDP has grown about 30% GDP per capita in the last 20 years. The US GDP, I actually forgot the number, but it's considerably higher. China has done a 10x. India, I think, has done an 8x. Russia has done something like a 5x. I'm pulling these numbers out of the top of my head. It'd be easy to check them on Google, but we get the trend. Every other single country in Latin America has their GDP per capita by at least up 2x. And Argentina has stagnated and is the 134th or 140th poorest country in the world when it comes to that. And if you go there, you're going to find a city that is the capital, Buenos Aires, is beautiful, is vibrant. People are very intelligent, very educated, incredible country, huge natural resources everywhere. How is it possible that things are not working? And the answer is it's socialism. It's a country where socialists have sucked them dry. But some people get offended with the word socialism, and we have to differentiate. There is good kinds of socialism, responsible one, well managed, well implemented, without theft. And then you have the Argentine socialism and the socialism that we see in Latin America, which is basically run by thieves. So when you go so deep down the shithole, an economy enters what we call a poverty trap. And it's like a perennial negative feedback loop from which there is no escape. You're stuck there. And the only way out is through what I call shock therapy, an external shock. Something from the outside needs to happen. That's Milei. It's an outsider, and he's there to break things up and try change. So that's how I see it. I'm extremely happy about it. And by the way, let me allow one more thing, Pomp. There, things are really bad in Argentina right now. It's inflation right now is running at almost 1% per month after Milei. There is no money. Things may even get violent on the streets because of this, but unfortunately, there's no money. Sacrifices need to be made. I mean, and when you talk about sacrifices, Milei leads by example. He flies commercial, even coach inside Argentina. Who does that? It's absolutely mind blowing. Like he has a presidential plane, a huge Boeing. That plane is sitting in a hangar trying to sell it. That's what leading by example is. I'm fascinated by it. Yeah.
So we see Milei in Argentina doing this. Bukele in El Salvador seems to be doing a number of similar types of things, at least the outside, external shock. He may not be as inflammatory in his rhetoric or, be able to articulate it in the same way. But one, okay, people pay attention. Two, we only need one more, and then it's kind of a trend. Is that really kind of how you see this playing out? Is that we should expect more of these external shocks that the various countries, their population are going to elect because they're fed up or they feel like there is no hope inside of the existing system?
Yeah, I do. Now, this doesn't necessarily mean a move to the right. I think it's more about political polarization. Is whoever is on the left goes to the right, whoever is on the right goes to the left. We saw that actually in Chile. It started in 2020. We had Chile even they've been changing the constitution to basically make it more fair to distribute profits to the masses. So I'm not a Chile expert, unfortunately. My Chilean audience, forgive my ignorance, but I know that's been happening. So the point there is that it's not just about a move to the right. We're going to see a move to the right in the US. We're going to see a move to the right in Europe this year, I think. We just saw it in Argentina. We saw it in Ecuador. In some other countries, we see exactly the opposite. I think it's about that, and about whoever takes over has to be an outsider. We saw it in Ukraine with Zelenskyy. Zelenskyy was a comedian, right? A TV star.
That makes Trump, Zelenskyy. You can go to Milei. You can go to Bukele. I mean, you can go around the country or around the world. There's a lot of these. How do you think that assets like Bitcoin or cryptocurrencies play into this? On one hand, the promise of these technologies and assets was it would be outside of the system, that if you bought this, it was a way to exit, to off-ramp, and kind of almost produce an external shock yourself for your own portfolio or your own bank account. But at the same time that they're becoming popular, they seem to be getting pulled back into the system. We see the Bitcoin ETF. We see, now Wall Street hedge funds, et cetera, starting to trade in these assets. How are you looking at this asset class? I know you're spending a ton of time here right now, given, the economic overlay, the political overlay. What's exciting, or where are you really focused? This episode is brought to you by Freck. Historically, the wealthy had a hidden secret in investing. They would spend a lot of money and use very big teams to conduct tax loss harvesting. Tax loss harvesting is the timely selling of securities at a loss to offset the amount of capital gains tax owed from selling the profitable assets later. But now Freck is bringing this incredible advantage to any investor. They'll literally lower your tax bill, regardless of how much money you have. They use state-of-the-art technology through a product called direct indexing to allow investors to invest in the S&P 500 while getting all the benefits of tax loss harvesting without the big bill. If you want to learn more, go check them out at freck.com. That's FREC.com. I'm a big fan of the product, and I even became an investor in the business. Freck.com. Go check them out today.
I think the Bitcoin ETFs, aside of being massively bullish for things I'm sure you've been discussing extensively, so everybody is on the same, we're all on the same page here. I think the Bitcoin ETF is a Trojan horse. Yeah, it's basically turning, we're turning Bitcoin into a TradFi asset, something that basically plays by the rules of the system. But by doing so, it's being used to onboard the system. It's the perfect Trojan horse, and it's going to end up in the 401ks of millions of people that otherwise would not have this exposure. And just having that Bitcoin there is going to make them think about it, and they're going to eventually, many of them are going to align the fact that they hold Bitcoin with the fact that they're deeply unhappy about how shit is going down, and they're going to connect that Bitcoin is actually an alternative. It's an alternative to the system. That's what it is. So that's how it ties up.
Yeah. What about other assets, stable coins or other cryptocurrencies? Do they follow that same trajectory of Bitcoin is the Trojan horse, and then here come all these other assets right behind it, or are they something separate and different?
I think it's separate and different. It's a matter of educating people. All the other assets are things we crypto natives delve in. They're very hard to understand. Take a long time to understand. They're complicated. It's difficult execution. Everything is difficult around them. So the way I see it is basically money flows into Bitcoin, and then it trickles down into all other crypto assets. But at the end, conceptually, most of the good ones, not all, they're the same. Then we have stable coins. What stablecoins do is they reduce inefficiencies, right? But at the end, they're soon good. There's somewhat regulated assets. They will eventually fully regulate it. Regulators have full control over, basically, they can go to Tether and Circle and make them blacklist addresses. So stablecoins do not fall outside the system like Bitcoin does. It's the way I think of crypto here is, it's on one hand we have the store value on the Bitcoin. On the other hand, we have payments. On the other hand, we have the ability of blockchains to deliver fast settlement and generate liquidity for assets in general. When people claim there is no intrinsic value there, and they get so upset, and we can point at any of these things, or just say, listen, just the fact that it's trading 24/7 and offers liquidity 24/7, that's value. You cannot get that anywhere else. Then we go into meme coins, and that's just a speculation, but people likes to gamble. So meme coins are casinos, right? So it's not just garbage. Much of it is garbage, but there is value under the trash.
When you're evaluating these things, how much of it is fundamental analysis? How much of it is more technical analysis? How would you describe your kind of evaluation process and what you're using to get to sift through, garbage and trash versus the things that may have some sort of value?
It's mostly, for me at least, it's mostly talking to people, to trying to assess where the market is going, where the market may be going. And if projects have good teams, not teams, what people I know, how people I know and respect greatly in the space, they think of not the project itself, but does the team have integrity or not? So not really asking and wondering where you think the price of this thing is going to go, but more of who is behind. So technicals matter. I wouldn't want to go against the trend for too long. When that happens, I do what is called basically puking. I just puke the whole position and get out. It's a combination of technicals, fundamentals, top-down macro view, and try to think what the market likes. Things like, for example, BitTensor, Tau, Ondo, Gamify. There's quite a few games that are really good. There is some really good alt layer ones and layer twos in the market. Some already out there, like Core DAO. Nobody talks about it, but it's there. And there's new ones coming up. We have Monad, we have Eclipse, Aztec in Q1 25. Taiki, there's a lot of innovation happening in the space. So sorry, I could not provide a very, very explicit, mathematically precise answer, but it's like a holistic process.
No, but I think it's important, right? It's not one thing to point at. Like part of finding the value is that you have to do the work. If you talk to a value investor in the public markets and they're looking at equities, many of the best investors, you ask them, well, how'd you find that? And they say, well, I sat and I read, the 10K or I read the S1s. I read all the Qs and the Ks and like I just went through all this stuff and I basically figured out exactly what I thought the company was worth. And then it traded below that. And I had a prepared mind and I was able to go and buy it at the right timing. You may not be reading a public letter or a public filing from a crypto project, but you're doing a lot of the similar work. You're trying to triangulate what is the value of this and also what is it likely to do in the future. And then you're making investment decisions where you're risking capital. So I actually think there's a lot of similarities, more so than maybe people realize.
Yeah, I agree. We've just need to roll up the sleeves and get to work. Yeah.
When you say something like I think you mentioned core DAO. I know nothing about that, but you say it's there and people aren't talking about it. How important is the social conversation and the memes and the what I'll consider kind of the degen coalescing around an asset in this market? We obviously saw GameStop and other things in public markets trade very differently because there was this surge of interest from non-professional capital allocators. Is that important here, or can you actually look at and say, hey, we think that this is a really interesting asset, we're going to buy it, and even if those people never show up and the memes and the culture doesn't come, we still think we can make money on an asset?
I think is extremely important. It's an attention-driven economy. Fundamental value of most of these things is very hard to quantify with any kind of precision, so it's very subjective. And most things out there, they never get to the public eye. So it's about basically the ideal world is having a team and a product that are very, very, very good, and then bring the spotlight onto them. But without the spotlight, these projects can have the most amazing tech that if they don't know how to engage with the marketplace, the marketplace of basically who has people who have money, basically, to drive prices and drive attention. Great examples of this is, let me pick a recent example. So, for example, on CoreDAO it's a pretty significant layer one. It's a Bitcoin ETH hybrid, so proof of work, proof of stake. They have insane engagement numbers, but it's mostly Asians and people from the emerging markets, real people from emerging markets. There is very little attention from the West on them. Another one, and that can change, right? A capable team can change that. Another example that is quite fascinating is what's happening with Trump. Let's pick. I try not to shield. In fact, I don't have a position on Trump, but the Trump meme coin. It's just a meme coin, has very little liquidity. It's there, and there comes a very significant market participant in the market and says, I believe in this thing. I'm putting my capital behind it for A, B, and C reasons. And suddenly goes from being an absolute unknown coin to everybody and every chat room talking about it. And suddenly it's the shit in a good way. So yeah, it matters a lot how teams manage public exposure.
How do you think about portfolio construction in a world where assets can be so asymmetric, but also there can be kind of the classic rug pulls and things can go down very quickly as well? Is it a heavily concentrated portfolio? Is it something where there's more diversification? You're trying to just, more like a venture capital portfolio, trying to get power laws to take over, even though some will be losers? How do you do it?
For me, it varies greatly. And what I do for myself is not what I would recommend for other people, honestly. Because I'm a very extreme risk taker. So I wouldn't say do what I do. I think everybody should have a very significant exposure to crypto. I would say somewhere between 5 to 10%. None of that 2% thing. That's nothing. Have some balls. But when it comes to that, it should be mostly for most people. I think it should be mostly Bitcoin, ETH, and Sol, and a few alternative projects out layer ones, like things that are very liquid. Because the thing is, with the most liquid things, as you well know, they can something bad can happen overnight and the thing drops 90% and never recovers. They can get hacked, or somebody in the team may have access to the private keys and there is an internal hack, and he takes over the treasury and he dumps the coin and it just never recovers. When it comes to me, it's I'm right now 70% of my book is BTC, ETH, and so quite evenly distributed. The remainder is all over the place, literally all over the place. Gamify, trying to get exposure on the AI side, Ondo on the RWA side, a lot of L1s and L2s. It's the rest is all over the place. It's quite a lot of basically spread and pray. And then some narrative trading, which is kind of like conceptually different. It's like you have cash, and then every now and then you put a trade for X number of days or weeks, try to get that 10 to 40% and out.
Let's talk Ethereum, Solana, Say, Monad. Maybe those are like 4 assets that generally are in a similar area. I think that there is a very hardened group of Ethereum holders, or Ether holders. They remind me a lot of Bitcoin maximalists. Just they're holding Ether instead of Bitcoin. Some people would critique them and say, "Hey, you're going to miss other things because you're part of the Ether religion." Then we have Solana, which seems to have become, the prettiest girl at the dance, and then it crashed. Everyone thought it was over, but it's come back and showed some resilience. And now there are these new projects that want to do these, parallelizations and kind of go and say, hey, can we take these ideas and improve them? How do you evaluate? Okay, we have 4 assets. They're all generally in a similar bucket. Should I buy one and try to pick the winner? Should I just buy all 4 and say, hey, it's so asymmetric that like just get exposure to all 4 and whoever goes up the most, great? How do you think about, actually putting a position on in an area like that?
I think you have to have a lot of conviction to just pick one. I breathe crypto and macro as well, but it's like I'm almost 24/7 on this, and I still don't have the conviction to go all into one and just ignore the other ones. So it requires a very special mindset to just pick one, and also very, very extensive knowledge. There are people who do it very successfully. Like, for example, there is a famous well-known influencer on Twitter that's gone all in on Tau, BitTensor, and hats off. It's remarkable. But that's difficult. On what you said about ETH, I think ETH is fantastic. I agree with you what you say about ETH maxes. They're a little bit more rational ETH maxes than BTC maxes, but they're maxes. Sorry, but I don't mean to. I don't never want to offend people, but maximalism, it implies Maro 9 said it implies inflexibility, and that's never good. It's good to be able to change our minds. On ETH, right now ETH is doing very well today because Eigenlayer reopened it lifted their cap, so reopened their restaking program. I forgot about the exact number, but it was a very significant number. So ETH is now undergoing a move of like, let's buy ETH to put into Eigenlayer for restaking, and then basically more or less, I gather in 4 months whoever restakes. So you get your ETH, you stake on say Lido or one of those, and then you restake that token, the liquid token, into Eigenlayer, and in say end of H1, you get points from Eigenlayer that eventually they are transformed into tokens, and the expectation is that that's going to yield about 50 to 150% based on Eigenlayer valuation. So that's a short-term move, I think. Then we have the ETF narrative that may or may not come true in May. The market is expecting right now a probability of 60 or maybe even 70% right now that it gets approved in May. I think it's too rich. I think for that to happen, we need Gensler out, and that happens once Trump wins. But I may be wrong. Solana offers fantastic innovation and product market fit today. Just went down today. I don't know how many hours, 4 or 5. So ETH maxes are having a good day. I think Solana is fantastic, and it's a proven winner. With the other ones, let's put it this way: there's 3 chains that have a real community, and there's a community. It's not hot money going in and out. Bitcoin, ETH, Solana. That's it. All the other ones are ghost chains for now. You mentioned Say. I just used Say for the first time last week. It was a disaster. My transactions wouldn't go through. There was barely any volume, so it was not a matter of, hey, it's a launch, things are going crazy, my transaction doesn't go through. No, it just didn't go through. I think Say has very low TVL, Aptos has very low TVL. There is very little money on these chains, and it's hot money. You mentioned Monad. Monad is a new chain, and is extremely, they've been doing an extremely good job on the marketing side, on basically capturing the mind share of crypto setters, traders, and investors. So I think not only that Monad is going to be doing extremely well, but also it has a chance to achieve what other chains like Say and Sui and Aptos have failed in doing, which is building a new community. That's very important. Aptos and Sui, unfortunately for them, they launched in the midst of like suicidal tendencies in crypto, like the depression, extreme depression. It's over, so they failed to. They just got unlucky. They failed at building that. I don't know. What do you think of that? Actually, I'm curious about your thoughts there. How do you see that?
I think that maximalism is not true on a macro basis. It can be true in a silo. So, for example, I think that Bitcoin is the winner for the global store of value, right? Like you can become a money maximalist. I always use the example: if you grew up in the United States, you're a dollar maximalist. You get paid in dollars, you save in dollars, you buy in dollars, you pay your taxes dollars, etc. But if you grew up in Mexico, you're a peso maximalist, right? Like, it's kind of that is the thing. And so this economy, for sure, Bitcoin is that store of value. It wins. And so being a monetary maximalist makes a lot of sense. But confusing the rest of these assets as competition to Bitcoin, I think, is wrong. They're just, technology evaluation, right? Same that you would do with public companies. You would never be like, I'm an iOS maximalist. I don't think Android's valuable. I may prefer iOS, but I can't say Android's not valuable. And so same thing here. And I tend to think that portfolio construction is really important. But if I was to boil down from like the essence of, how I view investing today, macro matters and global liquidity. Crypto is really just a trade on global liquidity. Then you look inside of crypto, and if you are investing in the crypto sector, you probably are fishing in the right pond. If you're not, or you have a very small allocation, you're probably just going to miss out performance because you're just in the wrong pond. And then within crypto, there's really a bifurcation. There's kind of the blue chips. Those blue chips will continue to do well, but as they get larger, their returns will go down. So, people who thought that the Bitcoin ETF was going to get approved and then we're going to hit all-time highs, I said it beforehand. I went on television and talked about it. I said, look, maybe. But also, I would caution that might not happen. And then the long tail is early stage venture, right? A bunch of them are going to be zeros. Some of them will win. The ones that win, though, will likely, if you build a portfolio correctly, be power law drivers that end up paying for the losers. And so, just got to ask yourself, what type of investor are you? And frankly, I think a lot of people they don't have the time. They don't have the interest or the energy that you or I would have to go and spend, all day long thinking about this stuff, talking to a million people, trying to figure out, all the latest trends. They're like, look, okay, I'm going to take, 5%, 2%, whatever the number is. I'm just going to buy some Bitcoin. Maybe I'll buy, one of the other ones, and let me know how it goes. I'll look back in 5 years. And for them, guess what they're doing in the rest of their portfolio? Passive indexing in the S&P, Qs, like that's the way they invest, is they're kind of passive indexers. And so I don't think that we should critique them or yell at them or any of that stuff. I think it's just, different people do different strategies, and that's okay. You just got to be comfortable with whatever strategy you pursue.
Yep, 100%. And something you said, I fully agree on the fact that Bitcoin is an entity by itself. Bitcoin has some competition from ETH, but not from the other ones. ETH, on the other hand, has competition from everybody.
Mm-hmm.
So that's an issue. that's a problem for ETH.
One other thing that I often think about, and I'll say this with, I don't know, 80, 90% confidence, is, people would critique Bitcoin and be like, oh, it's the first one. It's the AOL, right? It can't survive. And obviously, if you go and you look, like people have been trying to create a digital currency for a very long time. It's, 40 years after the first attempt, frankly, right? Bitcoin kind of breaks through. So it's not the first one. It's more similar to Facebook being like the 22nd social network. But I do think that Ethereum actually is the first attempt at kind of a smart contract blockchain. And so in a weird way, Bitcoin being, the result of 40 years gives it strength. Ethereum being the pioneer in a new way to do this actually may be a weakness. Doesn't mean that it'll fail. Doesn't mean that, it won't be valuable in the future. Doesn't mean the price won't go up. But structurally, actually, Bitcoin is not the first thing, and Ethereum is the first thing in their category. And so thinking through the pros and cons of that is pretty interesting.
That's a very good point, man. I have to say I hadn't thought about it this way, and I think you're right. Yeah, very good way to put it.
In some way, the critics say that Bitcoin is AOL, and again, I'm not saying that this is 100% true, but actually is Ethereum AOL, and Solana already showing it's the second, quote unquote, social network. It's the second search engine. And the Googles, the Facebooks, the 20th, 30th, 40th iterations of these things that end up being the real winners, those are yet to come. Again, I don't know. I know just enough technology history to be dangerous, right? So I'm not even an expert on that. But I do think that these are the components outside of just evaluating the community, outside of the technology, outside of the fundamentals of the assets and the markets themselves. Trying to look at history and how has it evolved is pretty important here as well, because I don't think that human nature's changed, and I don't think that these technology waves has necessarily changed either.
Something else on Bitcoin I'd like to add is the Taproot upgrade. Is it I think it was December 22 that opened up the way to ordinals and this whole ordinals layer 2 Bitcoin wave, and it literally solved the main problem Bitcoin had, which is very low fees. And what do we do once mining rewards evaporate? Now there is finally these guys with their JPEGs and eventually much more. They actually, it's not that I think, is they brought in a solution that works. And also I perceive that space has very little penetration in mindshare. It's like nobody outside of crypto knows about it, and most people in crypto still they're not interested in that space because they perceive they missed the beginning and it's too late. So what that means is there is a lot of room for growth to show up on top of Bitcoin still. I think it's very early, I think.
I completely agree. And in a weird way, I think there's been a narrative from some over the years that like the altcoins were R&D for Bitcoin. And that seems to be playing out in that specific use case. Doesn't mean that, kind of altcoins and et cetera won't be valuable or find their own use cases. But definitely, I think that Bitcoin's layer 2 activity and Taproot, et cetera, has learned a lot from what the altcoins have done, has seen a lot of use cases, and in some way is copying and trying to port back over some of that innovation, which is exactly what a great company or a great organization would do, right? Is you pioneer some yourself, you solve some problems, but then when you see somebody else doing something that's working, you don't have too much pride to incorporate that as well. And so I think that that also shows Bitcoin's ability to adapt to market conditions and incorporate other innovation as a positive as well.
Yeah, that's the beauty of it. I mean, like it or hate it, a big number of these things are copy paste. You can't copy paste the underlying chain, but all the applications are copy paste, or not all, but large number.
A lot of them. Yeah, a lot of them for sure. Yeah. Alex, I could talk to you forever. Where can we send people to find you on the internet or find out more about what you're doing on a day-to-day basis?
The easiest way is actually the only way. It's just Twitter, x.com /Kruger macro. And I'm oftentimes there. I enjoy tweeting actively. And engaging with people on direct messages. That's a way I have for learning about what's going on.
I love following your Twitter account because you're one of the only people who is weird enough to have the dual interest of macro and crypto. And so one day you may be talking about global liquidity or, a foreign central bank. And then the next day you may be talking about a random blockchain that, everyone's talking about. And I tend to
Thank you,
think
man.
that that is where outsized returns are going to come from in the next, 10 years or so. So I think that you're onto it and people should definitely go give you a follow if they haven't already.
Thank you. I appreciate it very much.
Of course. All right. Well, I appreciate your time very much, and we will do this again in the future.
Awesome. Thank you.